Okay, welcome to the discussion of Chapter 4 entitled Types of Major Accounts. In this module, we will discuss the five major accounts, cite examples of each type of account, and prepare a chart of accounts. So let's discuss what is an account. So an account is the basic storage of information in accounting. It is a record of the increases and decreases in a specific item of asset, liability, equity, income, or expense. So it may be depicted through a T account. So it is called a T account because it resembles the letter T. So this is an example of T account. It has three parts, namely the account title. Example is this, the cash. And um, the account title describes the specific item of asset, liability, equity, income, or expense. The left side is the debit side, and the right side is the credit side. So the debit side simply refers to the left side of the account. It is sometimes referred to as the value received. The credit, which refers to the right side of the account, is also referred to as the value parted with. So the difference between the total debits and the credits in the T account represents the balance of the account. In this example, the total debit is 1,500 while the credit is 800. So there's a balance of 700 pesos. If the total debit exceeds the total credits, the account has a debit balance. While if the total credits exceed total debits, the account has a credit balance. And these are the five major accounts. So the five major accounts, which is also called the elements of the financial statements, are actually the item in the expanded accounting equation discussed in chapter 3. So let us recall these items. First is the assets. Assets are the resources you control that have resulted from past events and can provide you with economic benefits. Liabilities are your present obligations that have resulted from past events and can require you to give up economic resources when settling them. Equity is the residual value of the asset and the liabilities, while the income, these are the increases in economic benefits during the period in the form of inflows or enhancements of assets or decreases of liabilities that result in increases in equity other than those relating to investments by the business owners. Income includes both revenues and gain. So what's the difference of the revenues and gains? Revenue arises in the course of the ordinary activities of a business. Example is the sales and the service fees, while gains represent other items that meet the definition of income and may or may not arise in the course of ordinary activities of an entity. Example, your business sells barbecue. The income you derive from selling barbecue is called revenue or sales revenue because selling barbecue is your main business or the ordinary business activity. So one day you decided to replace your old beach umbrella. So the umbrella has a carrying amount of 2,000 in your books of accounts. So what is the carrying amount? It refers to the net amount at which an item is carried in the books of accounts. So the umbrella with the carrying amount of 2,000 was sold um, for 2,200. So there's a difference amounting to 200. So the difference between the selling price of 2,200 and the carrying amount of 2,000 represents gain. This is because selling of umbrellas is not your main business or this is not your ordinary business activity. So bakit gain? Mas mataas yung pinagbentahan mo kaysa sa carrying amount ng beach umbrella. Another one is the expense. So expenses are decreases in economic benefits during the period in the form of decreases in assets or increases in liabilities that result in decreases in equity, excluding those relating to distributions to the business owner. Expenses include both expenses and losses. So what's the difference of expenses and losses? Expenses arise in the course of the ordinary activities of a business, while losses represent other items that meet the definition of expenses and may or may not arise in the course of the ordinary activities of the entity. Example, in your barbecue business, the cost of the barbecue you have sold is an expense. So this is called expense. And if you were able to sell the old umbrella with carrying amount of 2,000 pesos for only 1,600, the difference now of 400 represents a loss. So always remember that if the selling price is greater than carrying amount, the difference is a gain. And if the selling price is less than carrying amount, the difference is a loss. The five major accounts are classified according to the financial statement where they appear. So, assets, liabilities, and equity are balance sheet accounts, while income and expenses are income statement accounts. The balance sheet or the statement of financial position is one of the components of a complete set of financial statements. The balance sheet shows the financial position of a business. The income statement, on the other hand, or the statement of profit or loss, is a subcomponent of the statement of comprehensive income, which is also one of the components of a complete set of financial statements. This shows the profit or loss of a business. Chart of accounts. So a chart of account is a list of all the accounts used by a business. And kapag chart of accounts, merong naka-assign na number per account. Let's discuss the common account titles. So the following are the common account titles and their descriptions. First is the balance sheet accounts. So let's discuss first the assets. Cash, these are the different types of assets. Let's start with cash. So cash, it includes money or its equivalent that is readily available for unrestricted use. It may be cash on hand and cash in bank. So this is classified as asset. Next is the accounts receivable. So accounts receivable are receivables supported by oral or informal promises to pay. Next is the allowance for bad debts. So the aggregate amount of estimated losses from uncollectible accounts receivable is called allowance for bad debts, or another term is allowance for doubtful accounts. Next is the notes receivable. It is a receivable supported by written or formal promises to pay in the form of promissory notes. So kung oral or informal promises to pay, it is called accounts receivable. But if it is supported by written or formal promises to pay in the form of promissory notes, it is called notes receivable. Next is the inventory. It's not included in the PowerPoint. So the inventory represents the goods that are held for sale by a business. For example, in a manufacturing business, inventory also includes goods undergoing the process of production and raw materials that will be consumed in the production process. So for example, if your business is a clothing line, the clothes that are not yet sold is classified as your inventory. Next is the prepaid supplies. So this represents the cost of unused. Remember the word unused office and other supplies. Next is the prepaid rent. So these are the rent paid in advance payment. Prepaid insurance. So these are the cost of insurance paid in advance. So remember, kapag nasa prepaid, ito yung mga advance payments. Land. So this is the lot on which the building of the business has been constructed, or a vacant lot which is used to be a future plant site. Always remember that land is not depreciable or hindi bumababa yung value niya. Next is the building. The structure owned, this is a structure owned by a business for use in its operations. Next is the accumulated depreciation building. So this is the total amount of depreciation expenses recognized since the building was acquired and made available for use. Equipment. So there are different kinds of equipment. So equipment consists of various assets such as machineries and other factory equipment, transportation equipment. So these are the vehicles, delivery trucks, ganyan. Office equipment. These are the desks, cabinets, chairs, computer equipment, the server, the personal computers and laptops, and the furnitures and fixtures. These are the desks, cabinets, and movable partitions. And accumulated depreciation equipment. So this is the total amount of depreciation expenses recognized since the equipment was acquired and made available for use. So collectively, land, building, and equipment are referred to as property, plant, and equipment, capital assets, or fixed assets. Next is the liabilities. So these are the different titles, account titles under liabilities. First is the accounts payable. These are the obligations supported by oral or informal promise to pay the debtor. Next is the notes payable. So these are the obligations supported by written or formal promises to pay by the debtor in the form of promissory note. So basta kapag may notes payable, basta may word na note, these are written or formal promises to pay na merong promissory notes. Next is the interest payable. So this is the interest incurred but not yet paid, kaya nga payable pa lang siya. So it arises from interest-bearing liabilities. For example, you will incur interest on your bank loan. Next is the salaries payable. So salaries already earned by employees but not yet paid by the business. Utilities payable, these are the utilities such as electricity, water, telephone, internet, cable TV, etc. So these are the utilities already used but not yet paid. Next is the unearned income. So items related to income that were collected in advance but they before they are earned. So after the earning process is completed, these items are transferred to income. Siyempre, nag-advance sa'yo yung kliyente or yung customer mo, di mo pa na-deliver yung service mo or di mo pa nabibigay yung product. So may utang ka sa kanya. And it is called unearned income. So para hindi ka malito, the word receivable connotes an asset, while the word payable connotes a liability. Pag narinig mo din yung word na prepaid, it connotes an asset, while the word unearned, it connotes a liability. Next is the equity. So, equity is also called capital, net assets, or net worth. Owner's capital or owner's equity, this is the residual amount after deducting the liabilities from assets. Nag-i-increase ito kapag may investment or contributions by the owner or nagkakaroon ng income or profit earned by the business. Pero, nagdi-decrease ito kapag nagkakaroon ng withdrawals or distributions to the owner and may expenses or losses incurred by the business. Another one is the owner's drawings. So this account is used to record the temporary withdrawals of the owner during the period. At the end of the accounting period, any balance in this account is close to the owner capital's account. So kapag may nag-withdraw ng investment yung owner, dito nire-record sa owner's drawings. Next is the income statement accounts. Let's start with income. Service fees. These are revenues earned from rendering services. For example, services of a spa, services of a beauty salon, etc. Next is the sales. So revenues earned from the sale of goods. Example is the sale of barbecue, sale of souvenir items, sale of shirts. Yun. So these are in the sales, recorded in the sales. Next is the interest income. So these are revenues earned from the issuance of interest-bearing receivables. For example, may pinautang ka and merong interest yon. The interest is now will be recorded in the interest income. Next is gains. These are the income earned from the sale of assets, except inventory of course, or from enhancements of assets or decreases in liabilities that are not classified as revenue. Next are the expenses accounts. First is the cost of sales or cost of goods sold. So this represents the value of inventories that have been sold during the accounting period. Next is the freight out. It represents the seller's cost of delivering goods to customers. So other terms for freight out are delivery expense, transportation out, and carriage outwards. Third is the salaries expense. So this represents the salaries earned by the employees for the services they have rendered during the period. Another one is the rent expense. It represents the rentals that have been used up during the accounting period. So kapag nagamit na, kunwari kanina, meron tayong prepaid rent, yun yung advance payment mo. Ngayon, pag nagamit mo na yung expense, yung payment mo na yun, ire-record mo na siya as rent expense. Next is the utilities expense. It represents the cost of utilities that have been used during the accounting period. So, some business opt to separate these accounts for each type of utility. Meron yung gumagamit ng electricity expense, water expense, technology and communication expense, and the like. Next is the supplies expense. So this represents the cost of supplies that have been used during the period. Next is the bad debt expense. This is the amount of estimated losses from uncollectible accounts receivable during the period. So other term for this is doubtful account expense. Next is the depreciation expense. This is the portion of the cost of a depreciable asset. Example is the building or pwede rin yung equipment that has been allocated to the current accounting period. Another one is the advertising expense. It represents the cost of promotional or marketing activities during the period. Insurance expense. This represents the cost of insurance pertaining to the current accounting period. Taxes and licenses represents the cost of business and local taxes required by the government for the conduct of business. Examples, mayor's permit, other percentage taxes, community taxes. So for corporations and partnerships, income taxes are recorded in a separate account called income tax expense. Next is the transportation and travel expense. So this expense represent the necessary and ordinary cost of employees getting from one workplace to another, which are reimbursable by the business. For example, is the reimbursable taxi fares of employees running some errands and those who are working on late shifts. While travel expenses represents the costs incurred when traveling on business trips. Example, out-of-town travel costs of employees sent to seminars. Next is the interest expense. This represents the cost of borrowing money. So it is the price that a lender charges a borrower for the use of the lender's money. So other terms for interest expense are finance cost and borrowing costs. Counterpart nito yung interest income. So kung ikaw ang umutang at merong interest na babayaran, yun yung ire-record mo as interest expense. Miscellaneous expense. This represents various small expenditures which do not warrant separate presentation. And losses. These are the expenses which may or may not arise from the ordinary course of business activities. So losses may arise from sale of assets other than inventory at a sale price that is less than the carrying amount, gaya ng example natin kanina. Pwede ding decreases in the value of assets due to destruction, damage, obsolescence, and other changes in values caused by market factors. Kunwari, loss on fire, earthquake, storm, and other calamities. And the decrease in the value of foreign currencies held due to changes in exchange rates. So always remember that the term earned relates to income, while the term incurred relates to expenses. And in addition, the unused portion of a cost is an asset, while the used portion is an expense. For example, the cost of unused office supplies is an asset which which should be recorded as prepaid supplies, while the cost of the office supplies used during the period is expense, which should be recorded as supplies expense. So let's have an example for the asset. So a customer bought barbecue worth 500 pesos from your barbecue business. He told you that he will pay for it next week. So how will you record this or recognize this? So the 500 collectible from the customer is recorded as accounts receivable kasi oral or informal. Next, the customer with the 500 accounts receivable is broke, wala siyang pera, and you have estimated that you can only collect 420 from him, so kulang. Anong gagawin mo ngayon dun sa 80 pesos na difference? So the 80 pesos uncollectible account is recorded as bad debts expense and accumulated in the allowance for bad debts account. Next, your friend borrowed 1,000 from your barbecue business. You required from him a written promissory note to repay the money within 30 days plus 1% monthly interest. The 1,000 pesos collectible from your friend is recorded as notes receivable kasi meron siyang written promissory note. Next is this one. So you purchase pork worth 1,000 to be marinated and sold as barbecue. So ito, syempre, dahil ibebenta mo siya, this is recorded as inventory. Next is this transaction. You purchase table napkins worth 200 pesos to be used in your barbecue operations. So the table napkins, while still unused, are assets recorded as prepaid supplies. Pero pag nagamit na siya, they are recorded as supplies expense. Next, you are renting a space for your barbecue stand. The lease contract required you to pay 10,000 rent in advance. At sabi ko kanina, pag advance, the rent paid in advance is an asset recorded as prepaid rent. Kailan siya i-record as expense? Siyempre, this amount will be charged as rent expense when incurred or used up. Next, you purchase a barbecue grill worth 1,000 pesos. So the barbecue grill is an asset recorded as equipment. You expect to use the barbecue grill for 5 years. So the cost of the barbecue grill will be allocated over the 5-year period that you will be using it. The amount allocated each year is called the depreciation expense. Next, liability. You ran out of inventory of barbecue, so you went to Mr. Porky's meat shop to buy pork. You don't have the available cash, so you promise orally that you will be paying for the pork worth 500 next week. So oral and informal, it should be recorded under accounts payable. You had a loan of 1,200. He required you to write a promissory note to repay the borrowed money at some future date. So the 1,200 liability will now be recorded under notes payable because you issued a promissory note. Next, your loan requires repayment within 30 days plus 20% monthly interest. At the end of the 30 days, you will be incurring interest expense of 240 pesos. So, it should be recorded as interest payable. By month end, total salaries earned by an employee during the month amounted to 8,000. However, the employee has not yet claimed the salary. So dahil hindi pa niya nakiklaim, may utang ka sa employee mo. So this unpaid salary already earned by the employee is recorded as salary payable. Your electricity bill for the month of January amounted to 2,000. The bill is not yet paid. So the unpaid utility already used but not yet paid is recorded as utilities payable. Next, you receive an order of barbecue worth 800. The customer paid the sale price but instructed you to deliver the barbecue next week. So may advance payment siya. Right now, the sale price collected is not yet earned, kaya unearned, because the barbecue is not yet delivered. Thus, the cash collection is initially recorded as liability or unearned income and will be transferred to income next week when the barbecue is delivered. So yung iba, gumagamit sila ng account title na advances from customers or unearned revenue. Next is the equity account. You invested 800 to your barbecue business. So of course, it will be recorded in the owner's capital account. You made temporary withdrawals of 200 from your barbecue business. So the 200 withdrawals are recorded in the owner's drawings account. For the income account, you sold barbecue worth 500. So the sale is recorded in the sales account. Next is this one. So after a month, you will have earned the 1% monthly interest on the loan you have extended to your friend. Nagpa-loan ka sa friend mo, may interest na 1%. So yung interest na ma-earn mo should be credited to the interest income account. For the expenses accounts, the cost of barbecue that was sold for 500 is 300. Ibig sabihin, nagbenta ka ng barbecue na 500 pero nagastos mo sa paggawa ng barbecue ay 300 pesos. So this 300 pesos cost is expense as cost of sales or cost of goods sold. Next is this one. Your business has a hotline. Customers can order barbecue through phone call, text message, or Facebook Messenger. No delivery charges. During the period, the cost of gasoline for your motorcycle attributable to delivering barbecue to customers amounted to 100 pesos. So the delivery cost of 100 are recorded as freight out. Next, you hired a helper in your barbecue business. Your employee earns compensation of 8,000 per month. How will you record this? So at the end of each month, you will record the 8,000 earned by the employee as salary expense. Next, you are renting a space for your barbecue stand. The rent is 5,000 per month. So yung at the end of each month, you will record the rent expense of 5,000 pesos kasi yun yung nagagamit mong renta. Next, after a month of operation, your business receive electricity bill of 2,000 and water bill of 200. So the electricity and water bills are recorded as utilities expense. Next, the cost of table napkins use during the period amounted to 50. So dahil use, it will be recorded as supplies expense. So of your total accounts receivable of 500, you expect to collect only about 480 pesos. Anong gagawin mo sa 20 pesos? It will be recorded as budget expense. Next, the 1,000 cost of barbecue grill will be allocated over the 5 years that you will be using it. So the amount allocated each year is called the depreciation expense. The depreciation expense per year is 200 or 1,000 divided by 5 years. Next is this transaction. You paid Justin Bieber 5,000 to endorse your barbecue business. So how will you record this? This should be recorded as advertising expense. Next is the insurance expense. You have obtained a 1-year fire insurance for your barbecue stand for 12,000. So the used up portion of the insurance is recorded as insurance expense. Next, during the period you paid local taxes amounting to 500. So this should be recorded as taxes and licenses. So these are the examples of the different expense accounts. Another example, so if your barbecue grill is stolen, this should be recorded as losses. So for any questions and reactions, please just send a message in our MS Teams and Messenger. Thank you.